Brokers Digest, a webcast series by The Edge Singapore, discovering market opportunities with you. This episode is sponsored by Tiger Brokers.
Hello and welcome back to another episode of The Edge Singapore's Brokers Digest. I'm Felicia Tan, and this week we will be talking about the electric vehicle or EV boom and correlated sectors to watch. It looks like the EV boom, which began a few years ago, isn't dying down anytime soon. In fact, it looks set to continue its rise in 2021 and beyond. Estimates have shown that the EV industry will surpass $1 trillion in terms of demand value by 2027. EVs also look set to achieve the same sales figures as internal combustion engine vehicles by 2030 and outsell them by the year 2035. Governments around the world, including Singapore's, are also beginning to make the move towards an electric future. For instance, the Singapore government, during this year's budget in February, announced that it would set aside $30 million over the next 5 years for EV-related initiatives, such as deploying more charging points at public car parks and private premises. Besides new EV car makers, almost every traditional car maker, including Ford, McLaren, and Toyota, are also looking to pivot into the EV industry. In the stock market, shares in Tesla surged to $180.20 in February 2020, compared to the US $60 to $70 mark just a few months before. Prices in Tesla then spiked to an all-time high of $880 in January this year, before coming down to around the US $600 mark, which is still 10 times higher than what it was in late 2019. Joining us today to discuss the EV industry, EV stocks, as well as other sectors to watch, is Ian Leong, Head of Business Development at Tiger Brokers Singapore. Hi Ian, welcome back to the show.
Hi Felicia, thank you. I'm glad to be back.
First of all, shares in the EV sector declined in May over a list of concerns, including inflation worries. Tesla shares in early June dropped because of a decline in its April sales in China, although it increased by 29% the following month. Is now a good time to buy into the dip?
Well, indeed, general share prices in the EV sector declined in May over a couple of reasons, and Tesla was one of the counters that was impacted. Tesla share prices has had a couple of wide swings in the last couple of months, but each time it tests the 540 or 550 support, it tends to bounce back up. Well, Tesla had a stellar month in March when it comes to their sales in China, about a 35,000 vehicles sold, while it also declined to about, say, 25,000 in April. But numbers rebounded strongly for the month of May, coming in about, say, 33,000. Now, everybody knows that China is an economy that you cannot ignore. It's the second biggest economy in the world after the US, and when it comes to the automobile sales industry, it's ranked number 1 in the world. Ahead of second place US and third Japan combined at close to 26 million vehicles sold in 2019. And when it comes to their EV targets, they look to phase out ICE vehicles, or in short for internal combustion engines, by 2035. And the new vehicles have to be powered partially by at least electric, fuel cell, or plug-in hybrids. Well, this goes to show that there is a very positive outlook for the EV sector in China when it comes to their EV sales. And EV sales in China for 2020 was about 1.3 million indicative, and was just about 5 to 7% of the automobile industry. And given that global EV sales coming strong growth of about 43% year on year in 2020 itself, despite the COVID-19 pandemic, if you're looking to invest in this sector for the long term, I have to say the prospects indeed look rosy.
And in terms of buying into the EV sector, what are the best EV ETFs or counters to buy in terms of value and growth rate?
Well, it's hard to determine what is the best counter or ETF when it comes to investing. There are a lot of parameters one should look out for, and based on your investment horizon and objective, everybody's criteria are different. Well, personally, I feel if you know exactly what sector you favor for in the long term, but not sure what counters to invest in, if you want to take a look at ETFs. Now, for ETFs, apart from the fund objective and composition itself, what I feel that is equally important, it's also its liquidity. I mean, if it's traded on low volume, you'll be affected by large bid-ask spreads or thin layers, making it difficult for you to take profit when you decide to sell. This is something that one may look to avoid when selecting an ETF. So personally, if I'm interested to invest in the EV or clean energy ETFs, I may consider three particular ETFs. So the first one is the Global X Autonomous and Electric Vehicles ETF. It broadly invests in the autonomous vehicle technology, EVs, EV components, and materials. It actually tracks the selective autonomous and electric vehicles index. And apart from EVs, the ETF also consists of tech companies that are into autonomous vehicle technology, like say your Amazon, your Apple, and while it also includes established car makers that are producing hybrid cars or entering into the EV space. The second one, I'll look at its Invesco Willow Hill Clean Energy ETF. It broadly invests into the clean energy sector. It has a consumer discretionary portfolio of more than 20%, and it tracks the Willow Hill Clean Energy Index. The third one, last but not least, I'll be looking at its Global X Lithium and Battery Tech ETF. So as the name suggests, it broadly invests into the full lithium cycle, from the mining, the refining of the metal, all the way through to the battery production. And it tracks the selective global lithium index. So if you are looking not just at the EV sector, but sectors that may benefit in the rise of EV sales, this ETF is something that you want to take note of.
US listed EV counters are leading the charge at the moment. Of the companies, which US listed EV company do you think will benefit most from the boom?
Well, there are many US listed EV counters. You have your, of course, you have your, like say, your Tesla, who owns about, estimate about, say, 20% of the market share, and you're the market leader currently. You also have your Chinese EV makers, like say your NIO, your Li Auto, and your XPeng. And you also have other counters, like say your Ohio-based Workhorse, who are into electric delivery and van manufacturing. And when it comes to EV-related counters, you also have, like say, your QuantumScape, who are makers of electric car lithium batteries. And you also have, like say, your Plug Power, who are developers of hydrogen fuel cells. Now, if we see from a macroeconomic perspective, in the long run, your market leader, like say a Tesla, will always be around, given a huge potential of the Chinese markets. Your Chinese EV makers, like say your NIO, will also benefit due to their lower cost of goods sold, COGS, when making a unit, along with their beneficial tax and government subsidies in the domestic market itself. Thus, if let's say it comes to the ability to scale up and keep your COGS low, I believe these two companies should do better than the rest of the pack.
Thank you for that. What about Singapore listed companies? Are there any ones that will benefit directly from the rise of the EV industry?
Good question. Tough one. Well, SGX traditionally is the go-to platform of, let's say, you want to use REITs, business trusts, given our regulatory and requirements and a preferential tax system itself. When it comes to the EV side of things or related industries, I can't really think of a pure player per se. Well, I can think of, say, for example, ComfortDelGro. Yeah, you know that it's a household name in the local transport industry. It currently operates, like say, commercial DC charging stations for their cabbies and EV owners. And not long ago, it was also announced that they are partnering a French energy firm, Engie, to bid for EV charging tenders in the local market to install and operate 600 charging points in more than 200 public car parks in Singapore itself. Well, I believe this will be a good start for the company to foray into the EV related sector and to beef up its traditional business model of just transportation itself. And given Singapore's government target to add 60,000 charging points by 2030, I believe there is huge potential for companies in a tender for these projects.
What do you think is the market share of EVs in the auto industry currently?
Governments worldwide are regulating, phasing out ICE vehicles and incentivizing its people for adopting EV use. Well, adoption of EV has always been breathtaking in Europe. They overtook China as the biggest market for EV in 2020. And collectively, both countries accounted for a huge chunk of EV sales in 2020 itself, picking up about, say, 80% of the market share, with year-on-year growth close to 53% in the year itself, 2020. Now, given the strong adoption EV sales in 2020, while global car sales in general fell about, say, 15% due to the COVID-19 pandemic, we are looking at around a market share about, say, close to 4 to 5% for EVs as compared to about 3% in 2019.
Wow, okay. So what are the correlated sectors and companies investors should look out for then?
Well, basically, correlated sectors will include companies like specialized in EV charging points, or like, say, the batteries that EVs use. So some of these companies will include, like, say, charge point holdings. They provide charging points and solutions. You also have your QuantumScape Corp. They are the maker of lithium batteries for EVs. And of course, Plug Power, they are the maker of hydrogen fuel cells.
Okay. In your opinion, which ASEAN country has the best ecosystem in terms of EV investments?
Well, ASEAN has a total population about 670 million, about 9% of the world's total population. And when it comes to automobile sales in this region, Thailand, Indonesia, and Malaysia leads the way, and it's in this order accordingly. Now, ASEAN has always been an ICE vehicle-centric market, and I have to be frank, any ecosystem that we see in this region currently, it has to be in its infancy or initial stages at best. Well, to best encourage the use of EVs, government have to have an EV policy, definitely. And you also need to have an incentive system and an EV charging infrastructure to best nurture and grow this space. Well, if we have to pinpoint a few countries, personally, I believe Thailand and Singapore will be at the forefront. Well, if you take a look at Thailand, Thailand is currently ASEAN's leading manufacturer when it comes to automobiles by sales or production itself. Thus, it makes sense for the government to have an EV policy to raise the production and sales, to drive down the cost of goods sold, and to encourage the adoption of EV by its people. And they also put in place to triple its EV production targets to about north of 1 million by 2025, and it's also to increase its EV market share of domestic production to 50% by 2030. And they also want every EV to be locally produced by 2035 itself. And by having incentives for manufacturing of EV parts, batteries, charging stations, Thailand is one of the ASEAN countries that is aggressively trying to promote the production, sale, and adoption of EVs in its country itself. Now, if we take a look at Singapore, we also have a set of EV policy to encourage the growth here. But instead of focusing on the production and sales targets for obvious reasons, we are, after all, a very small country and a small domestic market. Our government actually focused on the policy more in terms of the adoption. So there will not be any new diesel car registrations by 2025. New car registrations have to be of cleaner energy models by 2030. And by 2040, all ICE EVs will be phased out. So our government also announced during this year's budget, 2021, that they will be spending 30 million over the course of the next 5 years for EV-related initiatives, incentives, subsidies for early EV adoption, and to encourage usage. And most importantly, when it comes to infrastructure side of things, range, it's very important when it comes to driving an EV. I mean, imagine driving your Tesla Model X, and running out of power in Jurong. But the nearest charging point is in Pasir Ris. You're going to have a problem, definitely, right? So with with plans to set up about, say, 60,000 charging points by 2030 in a land area about 730 square kilometer in Singapore. And this is versus, like, say, about 200 petrol stations in total in Singapore itself. I believe we will have one of the best EV charging infrastructure in the near future.
Speaking of the future, what do you think does the future of investing in EVs look like in the next 5 or 10 years?
We know that the reason for clean energy, global greenhouse gas, CO2 emissions, its governments worldwide, including China, has been putting in place policies and regulations to make sure they are on the right track to actually reduce such CO2 emissions and greenhouse gases. As this is also the reason that we have seen the EV market share when it comes to car sales increased by about 43% year-on-year in 2020. And this is all amid the COVID-19 pandemic, which also in a way drove down to the car sales itself. Now, if we are to dissect further, globally, the top countries when it comes to car sale is China, US, Europe, and Japan in this order. And during the earlier part of this session, we have also shared how Europe and China are progressing in their EV growth, while top countries like US and Japan, currently their EV market share only makes up to less than 2% of their total car sales market in their respective countries. And if we add in the fact that US President Joe Biden being a staunch supporter of clean energy, and more countries embarking on the same route to cleaner energy from a macro perspective, I believe the adoption rate and sales of EV will continue to rise and take up a bigger market share in the longer term. Rosy prospects. Thank you.
That's great. Thank you so much, Ian, for your insightful answers, and thank you everyone for being here with us. That is unfortunately all the time that we have for today. To watch a recap of this episode, you can come back to our Facebook or YouTube pages and find out more about investing through our weekly paper and website at www.theedgesingapore.com. Like us on Facebook and Instagram so you can be alerted to upcoming episodes. You can also leave us a comment below if there are any questions or topics you would like for us to discuss. Once again, I'm Felicia Tan. With me is Ian Leong from Tiger Brokers Singapore, and we will see you on our next episode on the 12th of July. Goodbye.